Welcome back to the channel. Today, we're diving deep into a topic that affects every single one of us, every single day, often without us even realizing it. I'm talking about banking. Every time you swipe a card, tap your phone or send money online, you're not just making a transaction, you're actually participating in a story that began hundreds, even thousands of years ago. It's true, banks have shaped empires, collapsed economies, and completely redefined what we even call wealth. Think about it. Where did banking truly start? And how in the world did we go from clunky gold coins to the slick digital wallets we carry in our pockets today? Get ready, because we're about to uncover the fascinating journey of money and trust, from ancient vaults to the cutting edge of Fintech. Our story begins in medieval Europe, not with grand financial institutions, but with humble goldsmiths. Now, these weren't just artisans crafting beautiful jewelry. They were also the custodians of wealth. They had the most secure vaults in town, and savvy merchants, always on the move, quickly realized it was much safer to leave their precious gold and silver with these goldsmiths for safekeeping. In return, the goldsmiths would hand them a simple paper receipt. And just like that, the very first deposit slips were born. Here's where it gets really interesting. Soon, people started realizing that instead of hauling around heavy sacks of gold, they could just trade these paper receipts directly. It was so much easier, so much lighter. This wasn't just a convenience, it was a revolutionary shift. This seemingly simple exchange of paper, backed by the promise of gold, was the true birth of banking. And what was it built on? Pure, unadulterated trust. People trusted the goldsmith, and they trusted each other to honor these paper promises. Pretty wild, right? As these goldsmiths accumulated more and more deposits, they started to notice something fascinating. Not everyone came back for their gold all at once. There was always a significant portion just sitting there, untouched. This sparked an ingenious and frankly quite audacious idea. What if they could lend out some of that idle gold? And what if they charged a little extra for it? Interest. This was a game changer. The moment someone realized they could literally create money from money. These written promises to repay, often called promissory notes, quickly became the backbone of our early credit systems. For the very first time in human history, wealth wasn't just about what you possessed. It could grow through debt. A revolutionary concept, yes, but also a risky one. This innovation fueled economic expansion, allowing merchants to undertake bigger ventures and even helping common folk acquire homes or tools. The power of credit was unleashed, paving the way for the complex financial world we inhabit today. Fast forward to the Renaissance, a period of explosive growth and innovation. This era saw the rise of incredibly powerful banking families, and none were more famous or influential than the Medici of Florence. These weren't just local lenders. They were international powerhouses. The Medici financed kings, funded incredible artists like Michelangelo, and even bankrolled wars. They introduced sophisticated accounting practices like double-entry bookkeeping, a system still fundamental to finance today, allowing them to track every single coin with meticulous precision. The Medici Bank pioneered systems that we still recognize. They established branches in multiple cities across Europe, introduced letters of credit that allowed merchants to travel without carrying physical cash, and even experimented with profit-sharing models. Banking wasn't just a local affair anymore. It had become a truly global enterprise, intricately linking politics, commerce, and art in a way that profoundly shaped the world. Their legacy echoes through the financial systems we use every day. As nations grew and empires expanded, the need for stability and centralized control over money became paramount. Enter the central banks. In 1694, England founded the Bank of England, a landmark institution and one of the very first central banks in the world. Its primary purpose? To lend money to the government and, crucially, to regulate the value of the national currency. This was a massive step towards financial order. Other countries quickly followed suit, establishing their own central banks. These institutions became the guardians of financial systems, balancing the delicate power dynamic between governments and private finance. National currencies unified economies, making trade and commerce much smoother, but they also concentrated immense power in the hands of a select few, laying the groundwork for modern monetary policy and the global economic stage. The 19th and 20th centuries were an age of incredible banking expansion, a time when credit truly became king. Banks fueled the Industrial Revolution, pouring capital into massive projects like railways, factories, and global trade networks. This expansion brought unprecedented economic growth and prosperity for many, transforming societies and economies worldwide. However, with this immense power came significant risk. The history of this period is also dotted with financial panics, devastating crashes, and terrifying runs on banks, where everyone tried to withdraw their money at once. When trust broke down, economies crumbled. From the harrowing days of the Great Depression to the more recent 2008 financial crisis, the story of banking has always been a dramatic interplay between the pursuit of growth and the inherent risks involved, constantly testing the very fabric of trust. By the late 20th century, the world was undergoing a seismic shift, the digital revolution. Banking wasn't immune to this transformation. Suddenly, ATMs appeared, credit cards became ubiquitous, and online banking started turning traditional financial institutions into complex networks of code and data. Money, once tangible coins and paper, was now increasingly digital, just bits of information moving across screens. Transactions started happening at the speed of light. A single tap on a screen could send funds across continents in an instant, fundamentally changing how we interact with our money and each other. But here's the complex part. While innovation brought incredible convenience, it also highlighted a growing inequality. Billions of people around the world remained unbanked, left behind in this new digital economy, underscoring the ongoing challenge of access and inclusion. Then came what we now call the Fintech revolution. Companies like PayPal, Venmo, and Revolut completely reimagined banking, making it instant, mobile, and incredibly accessible. No longer did you need to visit a physical branch. Your entire financial world could fit in your pocket. Today, digital wallets hold our entire financial identity, not just credit cards, but also cryptocurrencies and even NFTs. And beyond that, we're seeing the rise of decentralized finance, or DeFi, which fundamentally challenges traditional banks by using blockchain technology to remove middlemen entirely. This begs a fascinating question. Are we returning to the trust-based peer-to-peer systems of old, or are we truly creating something entirely new, something that redefines trust itself? It's an exciting time to be alive. So, what's next for banking? The future is already knocking. We're talking about central bank digital currencies, or CBDCs, digital versions of national money, issued directly by central banks. Imagine having your country's currency as a digital token on your phone. And then there's AI-driven finance, systems that could potentially predict your spending habits or financial needs even before you do. The line between technology and trust is growing thinner and more intertwined every single day. From the secure vaults of medieval goldsmiths to the intricate code of crypto, banking has always, at its core, been about one thing: trust. It's the invisible thread that connects every transaction, every loan, every digital payment. And as our world becomes ever more digital, as money transforms into data, and algorithms play a larger role, one crucial question remains. Who do we trust with our money next? What do you think the biggest changes will be in banking over the next decade? Let me know in the comments below. If you enjoyed this journey through financial history, please hit that like button, share this video with a friend, and don't forget to subscribe for more fascinating dives into the world around us. Thanks for watching, and I'll see you in the next one.